Hi, everyone. Welcome to today's edition of IR Insight Live from the Nasdaq market site. Joining me today is Masoud Ghazi, Senior Analyst with Nasdaq IR Intelligence. Masoud has been working with corporates and advising them on the equity markets for over 10 years, and we're happy to have him on today to talk about the 10th anniversary of the bull run. So welcome, Masoud.
How's it going, Lori?
It's going well. So thanks for being on, and let's get right into it. So it's the 10th anniversary. What are some of the catalysts that you believe have been driving the bull run?
So one of the strongest forces in finance is mean reversion. Coming out of the financial crisis in 2009, we saw the markets revert pretty aggressively. And as such, markets were normalizing, and as such, there was a rally. Finally, we had very strong accommodative monetary policy by the Fed, the BOJ, and the ECB, so that also juiced up returns. And for the next couple of years, we saw the markets, the equity markets, have a sustained rally.
Okay, so we've seen some renewed optimism in 2016. So what happened despite the nervousness around the U.S. elections at that time?
So basically in 2017, we had some of the biggest tax cuts and deregulation take into effect that brought in some renewed optimism into the markets. In 2017, we saw the equity markets rally about 20 to 30%, another 5 to 6% this year so far. Basically what happened was capital formation took place once again. The NFIB Small Business Optimism Index reached highs we last saw during the Reagan eras, and basically confidence in the U.S. economy is high. And also GDP growth kicked into high gear from 2 to 3% to 3 to 4%. So that's all contributing to a renewed optimism and another sustained rally.
Okay, so were there any recent headwinds or concerns around that sustained rally?
So recent headwinds include three things. One, the anti-trade policy that is being pushed forward currently, which are making investors nervous. One. Two, the emerging market contagion fears in and around Turkey potentially, also Argentina and some other countries that could spread into developed markets. And three, an end to the loose accommodative monetary policy, which may slow down growth. But however, I see the normalization of monetary policy as a healthy thing.
Okay, so what are the top institutional investors saying about the environment?
So looking at the likes of Fidelity, Cap World, Cap Research, MFS, JP Morgan Asset Management, some of the largest institutional investors, put them all together, approximately 5 trillion assets under management. I think the general consensus is that we are in the late innings. They're questioning how much more the rally can continue. A lot of the commentary is in and around peak earnings, peak GDP growth. So it remains to be seen what will come out of this, but however, they're repositioning their assets so that they can generate excess returns in such environment. Okay.
Masoud, thanks very much for those insights.
Great, thank you, Lori.
We appreciate having you on the show today, and thank you all for tuning in to IR Insight Live. If you'd like more information, please go to our website at business.nasdaq.com. Thanks again, and have a great day.